Morning, welcome to One Financial Markets Morning Commentary. I'm Andrew Johnston. Okay, so Friday's events, the CPI, which is the main one before I went and played golf. I gave two trades, which was short dollar yen and long gold, based on a big miss in the CPI month on month. The survey was 0.2, it came in 0.1. I was looking for at least a negative figure there. However, I think the market was so eager for it to be a negative number or a miss of some sort, then the market did react in terms of if it was nearly a negative number. We had a $5 move in gold, the upside, and then dollar yen, we had a 30 pip down trade. It actually moved about 44 pips on the actual news itself, but thinking about if you were lucky enough, you could have made about 25 to 30 pips on the move on the actual data release. Now, it was a miss, but it was a positive miss, if that makes sense. And therefore, the market just got ahead of itself, really. It really wanted a negative number there. It really wanted to sell dollars. It really wanted to buy gold. And it was really building up for the deflationary events from the PPI, the previous number. So it got ahead of itself a little bit, and then lo and behold, guess what? Algo's come back in and pull everything back to for dollar yen to actually end up in the day. Not unexpected that. Then if it had been a negative number, as I was discussing, then we'd be a lot lower. We'd be through our the range that we've been talking about, and the one that I've been very interested in getting involved in, which is the break of 108.30 with a target order of 7. I still have those figures in place and those figures in the back of my mind. We're now trading at 109.55 in dollar yen. Even after we had GDP results this morning, which were very, very good. GDP being the analysis of the health of the country, and potentially can be linked to the inflationary, as in the health of the country. People are more buying stuff, prices go up, therefore you have to raise interest rates. So you think the yen will go up? No, dollar yen is up. So someone's buying dollars and selling yen. Bit conflicting. A lot of traders out there are saying that's because the North Korean crisis is starting to filter out and die down, and therefore people are reallocating to more risk positions. I don't believe that. I just think people have got caught the wrong side of the market and getting stopped out. The consensus is that dollar is going to go down, and therefore we shouldn't fight that. Donald Trump's been very quiet over the weekend. We've had a certain amount of events in Charlottesville where there's been several deaths and injuries around the supremacist march there, and he's been very quiet about that, funnily enough. Very, very quiet, which is just really concerning for someone who likes to tweet so much. And he's got so much to say about everything, but not about what's going on in his own country. So, all very fragile at the moment. Dow didn't really do anything. If you have a look at a Dow chart here, we're actually starting to trace tick up. And then, so a bit of a damp squid on the Friday. I was all ready for the negative number, albeit it did go in the direction of the trade. I didn't put the trade on. I wanted a negative number. I didn't think they would react the way it did, but there was quick money there if you wanted it. And then we look at sort of what's going on today. I mean, over the weekend we had nothing, no information, very, 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 very boring. Once again, the North Korea thing is just going to pan out and die down. There's a lot more people in the background, and they have more sensible heads than the two idiots that run these countries, and they all know that they don't want a catastrophe on their hands, so they all it's all just sit down, guys, and shut up, basically. So for today, this week, once again, data just pretty pathetic, to be honest. Today we have of interest. Nothing of interest today. Some European stuff out, but really nothing of interest whatsoever. Tuesday we're looking at some RBA meetings early on in the morning, but then we've got maybe a German GDP, which is interesting at 7 o'clock, and then some sterling CPI. So Tuesday could be an interesting day in terms of there are some data releases, and we could, it could help move the market around a bit. Wednesday, building permits in the US, crude oil inventories, FOMC meeting minutes, which are at 7 o'clock, so we'll see if they've changed any rhetoric there, but I sincerely doubt it. And then on to Thursday, we've got some Euro CPIs, and then just the standard Philly Fed and industrial production figures in the States. And then Friday is nice and dull again, so I will look to try and get on the golf course at Half on Friday as well. Okay, just looking at some stuff, trades that we're looking for breakouts on, or looking to put on. Once again, I'm looking at my gold trade. It did hit 92 on Friday, which was the major resistance I've been talking about, but we've held around about this 1285, 1290 range. And then, like I said, I'm hoping for this to kick on now to 1317. The geopolitical environment has helped this, but I'm also looking for a lot more dollar selling in the coming weeks, so that should help the precious metals be slightly more buoyant. But in these turbulent times, everyone would like a little bit of gold. So even if we pull back here to 1280, 1279, I'm still thinking that we're probably finding the top part of the range, and then we definitely should be looking to kick on. But failing that, there can always be a rush of emphasis of that the world is all happy and everyone's great, and all of a sudden gold drops $50. But like I said before, doing some analysis for the last 5 years, we should be averaging around $83. So there should be another $40 to $50 worth of upside in this trade. So we'll just have to see how this pans out over the rest of the week. But in terms of trade, economic data and trade information out, we keep our eyes on the wires. But really, at the moment, it's very, very boring and very dire. And just for you short-term traders, just don't get caught out there trying to make boredom trades. The boredom trade being something you do when you're bored. Don't get caught. Just turn the platform off, go away and do something else. Have a look at prices on your phone, but don't get caught up in a boredom trade of which you're going to regret just because you want a couple of ticks out of it. It's not worth it. So from me in the front lines, here's to another exciting trading day, and I'll speak to you tomorrow.